Japan is known as one of the world's most advanced countries, which, as many know, is a stable and prosperous economy. Yet, beneath all of these economic glitters, Japan is actually facing one of the biggest economic threats ever known to mankind: a demographic shift. To put this into perspective, here's a graph with data that we collected from Our World in Data about the median age of countries. As you can clearly see, Japan's median age has risen very fast in just a short amount of time. Back in 1980, a special decade for the Japanese economic miracle saw the median age of Japanese people at just 31.7. But in the latest year available for 2023, it has risen to over 49. It doesn't seem all that bad if you just take Japan into this data, but if you add other nations as well, you'll see just how high the median age of Japan is. As you can see from the graph, Japan's median age surpasses all of these nations, ranging from the United States, Germany, South Korea, and China. But some of you may think that a rise in median age can just mean that people are living longer. Yes, that is correct for Japan. But a problem that isn't said yet is the fact that birth rate has remained low. Here's a graph on the fertility rate of Japan, which is how many children per woman, data that we collected from Our World in Data. You can see just how this plummeted over decades. As of the latest data available in 2023, the fertility rate stands at just 1.2 births, which is far below the 2.1 needed to sustain the population level. This combination of increasing longevity and a declining birth rate is leading to a society that is not only older, but also smaller. Why is this a potential problem for Japan? While longer life expectancy is a good thing, the resulting demographic structure, fewer young workers and more retirees, creates serious economic and social hurdles. These include rising government spending, ballooning national debt, sustainability challenges for social welfare and pension systems, labour market shortages, shifts in savings and investment patterns, and growing economic inequality between generations. To understand this further, let's break this down one by one. The first problem that Japan is going to face, and is currently facing, is a rise in government spending. Here's a graph on the government spending as a share of GDP in Japan, data that we collected from the International Monetary Fund. What this data basically tells us is that Japan's government spending has been steadily increasing, particularly on social welfare programs like pensions, healthcare, and elder care. While the graph that you see here depicts the overall government spending, a lot of this is actually because of social welfare programs. Here's a graph showing the government expenditure back in the 1990s in Japan, as compared to the latest budget available for the year 2024. As you can see, back in the 1990s, Japan's general expenditure had only allocated 11.6 trillion Japanese yen in social security, which was 17.5% of the entire government expenditure in that year. Yet, by the latest year available, the spending has ballooned to over 33.5%. You can also see in the graph that expenditures in economic affairs like public works projects, along with science and education, have grown very, very little. This is one of the biggest problems for the Japanese government today, and will continue to be a problem in the future. Rising public cost for the elderly would be okay, but as we mentioned earlier, what compounds the problem is the lack of young workers. If the Japanese government were to finance the care for these old people, other people, especially young ones, would have to pay for them, mostly through taxes. But since the lack of young workers are increasing, this has then become a big problem for Japan, which has no choice but to borrow the money. This is one of the reasons why Japan is one of the world's largest holders of national debt today, as it does not receive enough money from taxes to finance its expenditures like social security, and instead has to borrow them. But it is important to know that social spending is not the only contributor to the rise of Japan's national debt. The problem hails partly due to decades of stimulus efforts after the economic stagnation that followed the 1990 asset bubble crash. The government has repeatedly attempted to jump-start economic growth through public works projects and other spending programs. While some measures have prevented worse downturns, they also added to the debt. What this aging population does, then, is that it intensifies the debt challenge that Japan faces. On top of these issues, there are also problems related to the pension system of Japan. The pension system in Japan was designed decades ago when Japan had a more favorable ratio of workers to retirees. The system depended on a continuous cycle. Current workers' contributions would pay for current retirees' benefits. This worked when there were many workers for every retiree. Here's a graph on the old age dependency ratio of Japan, data that we collected from Our World in Data. What it can tell us is the number of dependents per 100 working-age people. A value of 20% means that there are 20 people of old age for every 100 working-age people. As you can see, in the latest year available, the number is over 50.1%, meaning that there are over 50 people of old age for every 100 working-age people. Comparatively, if you add South Korea, the US and Germany to this list, you can see just how many dependents there are for every working-age person. This then puts a strain on the pension system of Japan. Another issue about Japan's aging population is the labor market. A strong economy is dependent on a strong labor market. Younger workers bring energy, new ideas, and productivity. When a significant portion of the population retires and fewer young people enter the workforce, businesses may struggle to find employees. This can lead to reduced productivity, lower economic output, and stagnant innovation. This is again the same issue that the pension system faces. There are less people working now, putting a strain on Japan's labor market. Here's a graph to put this into perspective. Data that we collected from the OECD. As you can see, the working-age population has dropped starting way back in the 1990s. As Japan continues to age and see less births, this will most likely drop further. Finally, the last problem that we see is a drop in the gross domestic savings of Japan. Here's a graph with data that we collected from the World Bank on the gross domestic savings as a percentage of GDP. What this basically tells us is how much of Japan's GDP is being saved rather than spent on consumption or government expenditures. A decline in this percentage suggests that either households, businesses, or the government are saving less of their income or revenues. As you can see, the gross domestic savings as a percentage of GDP has been dropping every single year since 1970. A lower gross domestic savings rate could have long-term implications. One of these implications is reduced investment capacity. In a young and growing population, you typically see a robust savings rate. Young people and middle-aged households save money for future expenses, buying a home, raising children, or preparing for retirement. These savings then feed into financial markets, providing capital that businesses borrow to invest in new projects, technologies, and expansions. But as more people retire, they would start to spend rather than save, which would reduce the domestic savings of Japan. Now that we have a clear understanding of some of the challenges that Japan's aging population brings, what we want to discuss now is whether there are any potential fixes to it. One of the fixes that must be done is to address Japan's growing national debt. What they have done so far is that they have increased consumption tax, a value-added tax, to increase revenue. The tax rose from 5% to 8% in 2014, and then to 10% in 2019. Each hike aimed to generate additional government income to fund social security. Due to the economic challenges of Japan, however, the rise in consumption tax came with side effects, such as dampening consumer spending, especially among younger and middle-income households, and weighing on economic growth. Here's a graph on the gross domestic product, GDP, annual growth rate of Japan as compared to the world. As you can already see, and many of you may already know, Japan's economic growth rate hasn't been the brightest. So, when the Japanese government introduced taxes on consumption to fund their rising expenditure, it caused a problem for many middle-income households. Some analysts and economists then said that there must be significant reforms to fix all these. And, if there are no reforms made, either increasing revenue or cutting social spending, Japan's fiscal situation could become precarious. The only reason why we think everything might be good so far is that most of Japan's debt is composed of domestic debt rather than foreign debt. It is money borrowed from its own people rather than from foreign entities. Additionally, Japan's low interest rates ensure that Japan's repayments for these debts are very, very low. And as you can already see from the graph, National Debt Service only accounts for 24% of the total 2024 budget, which is surprisingly low considering the huge size of Japan's national debt. Another factor that Japan can do to fix its economy is to introduce migration. In recent years, net migration has risen in Japan, as you can already see from the graph. Had it not been for the recent COVID-19 pandemic, the net migration could have continued to stay high. But this is still not enough. Japan must introduce and allow more foreign workers to the country to mitigate labour shortages. So, as you can see, Japan's aging population is indeed going to pose a long-term challenge for Japan. But anyway, do let us know what you think. Thanks for watching.